Welcome to another live stream where I am breaking down a business evaluation for an entrepreneur that is in the professional services business. So as we get started here, as you all know, you can simply go to mlenow.com to get your own free instant business valuation done. It's pretty straightforward. Doesn't cost you anything, but it could teach you a lot about your business that you may or may not have known. You go there. If you've seen any of these live streams before, you know that you can connect directly to QuickBooks, or you can just do it manually. And folks have been telling me they can't kind of see in the video everything I'm talking about. So just do a little zoom in here so you can pick the manual entry if you want. And yeah. And that gets you going. Sorry about that. All right, so let's hit the manual button. Let's get another business valuation going in here. We are up to, believe it or not, 1,100 business valuations in the last 70 days, which is pretty awesome. I'm going to zoom in here so you can all see the numbers as I drop them in. And this is this one that you're looking at today is kind of a classic entrepreneur that doesn't understand their business, but we're going to go through it and this is going to be really helpful. So I'm excited. Okay, so we fill it out. This person operates a business. They are in the professional technical services business. They use QuickBooks Online, so they could just punch in all of this automatically. Right, their assets. This is where it gets good. We got $12,000 worth of assets. They have no liabilities. They owe no man nothing, which is awesome. They have equity of $100. So let's just camp out here for a minute. My job is to help you understand your finances a little more than you do today. So here's the deal. You own stuff. You owe stuff. The difference between what you own and what you owe, it's called your equity. If you have $12,000 worth of assets and you owe no man nothing, zero, your equity is not $100. It's $12,000. Very simple. All right. I understand that can be confusing. You know, the word assets, the word liabilities, all this can get kind of out of sorts for people. And the word equity, right? Ooh, very scary. But assets minus liabilities equals equity. So it's okay. It's a good thing that these business valuations are done anonymously so that nobody's embarrassed. In the pleasure of your own home, by your own computer, looking at your own finances, you can reflect back on what I'm talking about here. All right, so nice little business, do about $350,000 a year. So that tells me that they're probably an engineer, maybe an accountant, or someone that works on their own. So that means to you and me, they make $350,000. They don't have any inputs. There's nothing required for them to make that $350,000. They probably just fill out their time, which means they have, guess what? $350,000 to pay for the expenses of their business, which happen to be, in this case, about $120,000 a year, which leaves them with about $150,000 a year. So again, feel like we maybe just need to park for a minute on this. As an entrepreneur, you make money, you spend money. The difference between the two is what's left as profit. If you make $350,000 and you only spend $120,000, that doesn't leave you with $150,000 worth of profit. It's just simple math, folks. You just gotta get the math right. But that's why we do this, because as an entrepreneur, I don't want you to be embarrassed when you have to talk about your business and the financials of your business. And instead, you can say, thanks to that guy, Dylan, man, he really showed me. He really taught me some stuff. All right, so we're gonna go ahead. We're just gonna calculate the business value. Let's see where this kicks out at. Whoa, boom, this business is worth $450,000. It's pretty good, right? For a business that generates $350,000 a year. They're a professional services business. So let's just slide over and see what their business should be worth based on industry benchmarks. And again, some people say, you know, industry benchmarks, Dylan, what's the point of these industry benchmarks? And my opinion is that most entrepreneurs don't know what their business should be worth. They probably, first of all, definitely don't know what it is worth based on any basic math, because the financial statements are generally always wrong or not up to date. That's fine. It's just part of running a business. But not only do they not know what they are worth, They don't even know what it should be worth. And so using a simple valuation tool like emilynow.com, you can see based on industry standards, a business in that category or that particular sector of the market, here's what other companies are doing. So your business measured against their business gives you kind of something to work towards. So as we do this, we can see that this business, let's see if I can zoom in here a little bit here. Oh, there, how's that? So we can see this business is worth about $450,000 as is where is, but it could be worth, believe it or not, about 527. And before we get too far into the nerdy math, you can probably already tell why there's a gap here. The gap is here because they actually haven't reported their revenue and their expenses properly because the basic math just doesn't check out. 350, well, let's just go into it. Let's take a quick look here. So what we can see on their profit and loss statement, if we zoom in, oh, maybe a little too much. Here's what we can see. We can see that their revenue is $350,000. We can see that their operating expenses are $120,000. What we can see from this little bell is this information is not correct. They're not making $150,000 profit. They are making more than that if this information is in fact correct. In fact, the right information would be they're making $230,000 worth of profit. There's also some other things here that don't make a whole lot of sense. And so let's see if we can figure this out a bit. I'm going to try and get you guys a better view on the video because I know that that can be a little tricky to see. Okay, over here we can see they have $12,000 worth of assets. They have no liabilities. Again, little bell tells us that maybe that doesn't make a lot of sense. And only $100 worth of equity. As we've talked before, assets minus liabilities equals equity. And what equity represents is the amount of profit, generally speaking. Equity represents the amount of profit that a business has made since the very beginning of when they started. Said another way, if this business was generating $150,000 worth of profit, we would see at least over here $150,000 worth of profit, especially when their liabilities are zero. This is a very straightforward math equation. And so we can clearly see that whoever this is, probably not an accountant. I know I said that at the beginning, but probably not an accountant, but they are in the business of providing professional services, which means they don't produce a widget. They don't have any material costs that they have to pay for. We can see that because it says right here, $0 cost of goods. They have nothing that they have to purchase in order to make this revenue. They basically just sell their time. But let's see what everything should be. So it says no changes to their gross margin, no changes to their net margin. So they're making enough money. Again, margin just represents how much money do they have to pay for their expenses. But we can see on the balance sheet, which we've already talked about, that it just simply doesn't make any sense that they would have $12,000 worth of assets and no equity. At a minimum, what we would see is if this math was correct based on their revenue less their expenses, that they'd have about 150 grand in the bank, but they don't. They have $12,000. So it begs the question, like, where's the money going, right? The money's got to be moving out of here somewhere. So my guess would be that if this business was reporting their financial statements properly, if their information was up to date, that this business is about a $600,000 business. And in a professional services business, you might say, well, what is someone purchasing? I mean, if someone is selling their time and they're basically just taking the money that they make, what is a business like this worth? Well, it depends. Maybe they have a particular book of clients, and that those clients generate a certain amount of revenue every year. The simplest example of that would be a lawyer. As a lawyer knows that every year, this is my book of clients. I've been doing this for a decade. Although I don't think that's the case in this valuation because the balance sheet is just so terribly wrong. But I'm a lawyer, been doing this for 10 years. I know that I have 500 clients in my book of business, and I know that 300 of them every year are going to bill X amount of dollars. And so someone will come along and will say, great, then I'm prepared to pay X amount of dollars for that book of business. So in this case, if it was correct, there probably someone would say, look, I'll give you $600,000 for your business. And then the art of the deal kicks in, and I'll pay you, $300,000 now, I'll pay you $200,000 next year, and I'll pay $100,000 the year after that, assuming that you're able to help me retain your clients and the amount of business that you have. So Uh, that's a professional services business. But as you can see, we're into, what is this? I think this is episode number 6 now. There's a pattern that develops with looking at these and understanding what's going on. First of all, you do have to have your books up to date, and that can be really tough, but that's a great place to start if you're trying to build a valuable business. Get your books up to date. Nothing more important than having that happen. And with technology today, there's no reason they can't be up to date. You can plug in your bank feed, you pay your bills. I mean, every day, whoever your bookkeeper or accountant or even you can just do it yourself. Just look at what's going on in your business, match your transactions, and make sure your information is always right. So that's something that you probably are noticing, that the math isn't right. But there's also a big disconnect between what is a balance sheet versus what's a profit and loss statement. And so balance sheet represents what do you own, what does your business owe, and what's left over is equity. No different than like your personal net worth statement. I own a home, I have a mortgage, what's left is my equity. Your profit and loss statement on the other side represents what you make, what you spend, and what's left. And what's left finds its way over to your balance sheet because you either purchase assets or you pay down liabilities, and it ultimately becomes equity in your business. So thanks for tuning in. If you found this helpful at all, please make sure to subscribe, hit the notification bell, do something with it, because as you do that, it sends up little signals into the internet that says, hey, this guy Dylan here, he's talking about some stuff that I think is important, and other people might find it important as well. So I'm also pretty easy guy to get a hold of. So if you have questions, you want to send me your business valuation, all of this is anonymous. There's no personal information being shared with anybody here. So you can be rest assured that while I might make some comments that you don't appreciate, at least I'm going to tell you the truth and tell you what's going on with your business. And I too run some businesses. So this isn't just a talking head. I use emilynow.com for my own portfolio of businesses to understand where I need to be focused. And then I've got a good team of people that are helping me make decisions every day, every week, every quarter to make sure that the time I'm spending, the effort and energy I'm putting into these ventures is in fact worth it. So thanks for tuning in, and we'll see you on the next live stream.